Welcome to our Fast 5 series in which we touch upon 5 key questions that are on top of investors' minds. In the third episode, weeks before the union budget, we welcome Mehul Jani, Fund Manager, Listed Equity, IIFL Asset Management. Hi Mehul, great to see you. Thank you for taking time to speak with us.
Glad to be here.
Shall we begin?
Sure.
So what role does the union budget play in decision making?
So the union budget, what we've seen over the last few years has become a lot more consistent and predictable, and therefore doesn't really have a big impact on markets or portfolio decisions as well. But it's still an important milestone to see which direction the government is focused on, what the key priorities are. This year, for example, we continue to believe that the government will focus a lot more on the investment side of the economy, spur manufacturing, and encourage investments across several sectors. Having said that, there is also an urgent need to focus on the needs of the bottom of the pyramid, especially in the light of the K-shaped recovery that we've seen post-COVID, as well as the fact that inflation has been running quite high and cost of living has increased materially for these set of population. All of this has to be done with a clever balancing act with fiscal discipline and a clear glide path to bringing the fiscal deficit down over a period of time.
What sectors are you optimistic about?
So the two sectors that we are quite optimistic about are the financials and industrial sector. Financials valuations seem very reasonable to us, especially in the light of the fact that growth has improved and return on equity has improved materially, especially versus the last few years. Industrials are also benefiting from significant tailwinds. We've seen increased capex announcements, improving order books, as well as revenue growth improvement. And there's another tailwind as well, right? So we've seen a lot of outsourcing activity also pick up. New manufacturing bases are getting set up in India, having seen that wage growth and energy costs have increased materially in the developed world.
So does the budget impact your investment process? And could you highlight one key investment process for us?
So the budget doesn't really impact the investment process, right? You have to stick to the basics. You have to, just follow what works for you. And so I'll just talk about one key investment process that we tend to follow quite regularly, which is just having a pre-trade checklist. So, like a doctor or a pilot, it's very important to make sure that all the boxes are ticked off before you take a decision, just to prevent any unforeseen errors that might creep in. So, we have a pre-trade checklist which makes sure that questions are asked, such as, have you considered other options in the sector? Have you looked at other portfolio options with better risk reward? Are you just doing this because you've met the company recently? There's this urgent need, it's a human tendency to just act on something that's, most readily available information as well. So just remove these biases and, go through the checklist, pause and think before you take a decision. The other thing to remember is that you have a recorded checklist, so you can go back in time and, just check what your thoughts were about a company, and that just removes hindsight bias as well.
And what's your view on the current market valuations?
So market valuations today, we're at about, on a Sensex price to book basis, we're about a 3.4 times price to book. 3.1 is the long-term average. 2 to 4 is broadly the range that we've been in over the last 22 years. So we're not at extreme points right now, but I would say we're at a premium as we stand today.
Finally, what would you like to say to our investors who, of course, will be watching the union budget closely?
So all I would say is, don't focus on the short term. There's been, a lot of events that have taken place in the last 12 months. There will be more that will keep coming through, whether it's the war, whether it's Fed rate hikes, whether it's RBI rate hikes, whether it's the union budget. Just invest with at least a 5-year horizon. Ignore the volatility, ignore the noise, and just stay the course.
Thank you, Mehul, for this insightful Fast 5 discussion. We look forward to hosting you again.
Thank you.